Hello traders, welcome back to my YouTube channel. I am Kingsley from Forex Trading with Kingsley. In today's video, I'm going to be sharing with us how to take sniper entries on smaller time frame based on information gotten on higher time frames. So I'm going to be introducing the AB equals to CD analysis. I'm going to be introducing the AB equals to CD chart pattern, and I'm going to show you how to take this information and drop to smaller time frame and get sniper entries. So make sure that you watch the video till the end, and you are going to add something to your trading arsenal. So let's head down to the video. Alright guys, you can see from here, we can see that price actually is in a downtrend. That's the overall trend of the market. So remember, this trade we are going to take it, we are doing our analysis based on reversal pattern. So we know that price move in swings. When it moves down, it exhausts, it moves down, it exhausts, it moves down, it exhausts. So we can see that overall price has moved down from here, and down here we are seeing rejection candles, and it is confirming the AB equals to the CG pattern. So this pattern is mainly when price forms a swing high, which is the lower high in this situation, which is known as the A. It's labeled as A, which is this zone around here. It moves down, reverses from the B. It reverses about 30%, 50% reversal, or 60%, depending on the power of the trend. So when it reverses, it forms this zone, which is known as the C, and moves to the G. So we call this the A B equals to C G pattern. All right, so most often when it reaches the G, prices are most likely to reverse back up, before the trend continues. It could reverse temporarily for the trend to continue, or it might reverse permanently, and then the trend will be changing. So in this situation, we are forecasting that price is going to reverse here. So from this, if we are even using our line charts, we are going to see that better. All right, so this is it here. We consider it to be A B C D. So this is the A, from A to B, and this is C. All right, this is AB, and then from B to C, and then we move from C to D. So this is it, and now this is how price will likely move. All right, so when we do this analysis, we are hoping that we are forecasting that price will likely reverse from this swing. So it is a reversal pattern, and we are going to be taking it based on reversal. So normally for swing traders who take trades here based on this pattern on itself, they are going to take their normal entries here, placing their stop loss below the zone and their TP somewhere up. But most of us in this channel are day traders, so we like to get sniper entries in smaller time frames. So what we do is that we drop down to a smaller time frame like the H1, and then we try to look for chart patterns. All right, if you look for chart patterns which are reversal patterns, like the double top, the double bottom in this situation, we look for double bottoms. We look for inverse head and shoulders pattern to take our entries. So here from our chart here, we can already see a potential inverse head and shoulders pattern that is about to be formed. So what we do is that we can see that if you use our line chart, you can see clearly here that this area here is a demand zone. This is a demand zone here, which was created as a result of price finding multiple rejections around here. When price was coming down, it got rejected, it came back, it got rejected. When it came, price break through this zone now, creating a hit here. When price moved, it happened to break out from this supply zone here, going up, and then it came back now to retest the zone. So you can see clearly from here, and here we'll be now looking for a buy setup. All right, we'll now be using this to get our sniper entry, and price might likely be heading up from here. So we have done the analysis on a bigger time frame, and we are now going to look for a potential buy set up here. So what happened now is we are going to be taking trades based on the type of traders we are. Well, we have scalpers, we have day traders. We know that scalpers will be taking direct orders from here. Scalpers might want to drop down to smaller time frame. Let me sketch out the zone so that you see better to take their orders. Why day traders might be entering the H1 time frame so that the trade can run and run. So if we use our trend line as well, we are going to see that price has broken the trend line temporarily. Let's just say here you can see here that price has somehow closed above the zone. Okay, you can see that somehow this candle has closed above the zone, and then it has come back to retest. So we will now be looking for entries. So we see we have increased our confluence of entering. We have gone to higher time frame. We have seen a pattern which is a major pattern, the AB equals CD pattern. We have dropped to smaller time frame. Now we are now looking for a chart pattern to enter. All right, now if you want to be a conservative trader, will now wait for price to really prove that it has formed this pattern by allowing price to break through the zone, reach here. Okay, so a conservative trader might want to allow this in a higher time frame for price to really move up, then retest this zone to prove that it has really broken this trend line, because sometimes it might still be a false breakout. One never knows. The market does what it wants to do. So you might have to wait for price to move up and then come back and retest this zone here. So if we wait for price to move up and then retest this zone before they take their entries, so price might have to move like this for them to enter. So wait for price to move up, retest, and then enter. Well, we have scalpers might want to go down to smaller time frame like the 30 minutes and then just interpret as price has already retested. So you can see from this multiple rejection from this multiple weeks around here, scalpers might want to jump in here, interpreting this as price has already retested. So whichever way we are forecasting that price is going to reverse in a little bit. So you can see how the strategy is. We are now just waiting for price to play out, and for me, I'll prefer to wait sometimes for price to move up and retest before I enter. But if I see how, if we look our chart here, we'll discover that price is actually consolidating, and price might have to consolidate within this range a little before finally breaking out. So that is the analysis, guys. That is the analysis. You see how we have entered, we have done the analysis, we have broke down how we have done a breakdown of the analysis, going to a higher time frame, looking for bigger patterns, dropping down to smaller time frame, looking for chart patterns to enter. So that is how it is, guys. That is how it is. So let's watch and see what the market is going to present. All right, guys, you have seen from the strategy, I've explained to you guys how to take trades on smaller time frame based on information gotten on higher time frames. So remember, there is no strategy that is invincible. Okay, so we cannot control the market. We always do our analysis, and we place our stop loss, we place our take profit, and whatever comes we accept the fade, and we make sure that we keep on trying as much as possible to increase our win rate, and in the long run we are going to be profitable. Actually, I have just introduced this AB equals to CD pattern. In the next video, I'm going to talk on it detailedly. I'm going to show you how to use the Fibonacci tool, how to use the ABC tool in order to mark out our zones, to determine where to enter, set our targets, and all of that. So it was merely an introduction. That is how to enter based on this pattern, but it was more of an entry in a smaller time frame. So thank you for watching, guys. Please, if you are new to the channel, do me a favor, click on the subscribe button, click on the notification bell, click on that like button, give me a thumbs up, so that whenever I post a new video, you are going to get notified. Thank you for watching, guys.